If you are looking to build an incredible business, you are about to hear from one of the sharpest minds in real estate today. But hang tight, because we're also going to talk about going international, investing in Florida real estate. Today, I have Mark Faris. He is globally recognized as one of the top names in real estate. He came as a highly referred person by multiple people, and they said, you got to meet Mark. You've got to meet Mark. We got the chance to connect recently, had a great conversation talking about all things holistic life, business. Then I found out why I saw a giant billboard with his face on it when I was recently in Naples. Welcome to the Prime People podcast, Mark.
Yeah. Thanks, Justin. Thanks for being here.
Yeah. So I was shocked, actually, when we were driving through Alligator Alley. We came back from Weston, and then I saw your face. So why don't we start with that? How did you end up selling real estate in Florida?
Yeah. So is in around COVID when during the lockdowns and whatnot, we had been running the business from really online, in the sense that we were having in-person meetings for the real estate team. We have about 50 agents, about 50 team members, operations, so collectively just over 100. And so we would meet in person on a weekly basis. And then when COVID and the lockdowns happened, it moved everything online. So we were doing our online, weekly meetings. And it was interesting. It came to a point, I think it was like in a snow blizzard. I'm sitting there, we're running the meetings. We built a strong leadership team and management team. And I thought to myself, you know what, we could really do this from anywhere. And we always wanted to go to Florida. So, why not actually spend more time in Florida during this period? So we got student visas down there for the kids. And when we were down there, we saw an opportunity to launch an office down there. So we did. And then we ended up getting into the real estate investing side, which I know we'll talk a little bit about as well.
That's awesome. Well, you can't help it, right? I think you're born and bred. It's in your blood. What's your background, first off? Like, how did you first get involved in professional real estate?
Yeah, so I was a hockey player prior to real estate. Played a little bit, a couple of seasons over in Sweden, and then down in the States, and semi-professionally. I was never good enough for the big show, but yeah, I mean, there was always the dream to play in Europe. But when I was put on waivers or was cut from the team down in Texas in the Central League, I moved back, and I thought, I was trying to figure out what it is that I should be doing. And I thought, I always loved real estate investing. What better way to learn about real estate investing and become an agent? And so in 2007, I jumped in. My wife was doing the marketing and staging. I was doing the door knocking. Fast forward, we ended up, basically we maxed our credit cards out for the first 6 months, $10,000 in credit cards. And finally we pushed through, and we scaled the team up to about 1,000 sales. And then we hit another ceiling. And then I had to transition out of selling myself personally and figure out two big questions. One, what is a scorecard of a CEO? Like, we had scaled to 1,000 sales, and I really didn't know what my scorecard or job description really should be. If you really dissect out, like, what am I truly responsible for? And then the other question that I had was, what are the barriers to growth in companies? Like, why do companies hit ceilings? Because we were hitting the ceiling. And so I transitioned out of selling and went down this pathway of 2 to 3 years of just diving into, Vern Harnish scaling up methodology, EOS traction, Jim Collins, Good to Great. And we built a strong leadership team and management team. And then, we finally, we broke through, but that's the story, origin story.
You make it sound so simple, Mark, but there's probably lots of grit that was necessary through those times, right?
Yeah. I mean, just like any business owner, I mean, I've heard women say that it's like giving birth. And most women would probably say that's not even true, because I know what it looked like. But, Elon Musk said it's like looking into the abyss, chewing on glass sort of approach. And it's tough, but, I think Steve Jobs had said, you gotta really love what you're doing, because otherwise, you won't push through. And it's all business owners, including yourself, Justin, because I know your story there, you had to muscle your way through, and it's incredible to see what you've built. But it was tough. Definitely a lot of challenges through the way, but that's the good stuff. That's the stuff that makes you better and forces you to grow, which is what you need to get to the next level.
Yeah, and that's where the success lies, in my opinion, right? Is pushing through those tough times and looking back and seeing where you're at. I also see with guys like you and other people that I respect in this industry, probably a day one mentality, right? Where you're always looking back and thinking about, okay, now how do I optimize? What can I work on? And I think being productive gives you a sense of purpose One question I have when you go back to the scorecard piece, how were you able to really shift your mindset from being, say, only in production and everything relying on your shoulders to realizing what your scorecard should actually look like?
Well, first, I mean, I think the very first thing from a mindset change is getting very clear that the clients weren't committed to me personally, and they were committed to the standards and to the care that I was giving them. And so if I could train my people in a way, my sales partners in a way that could do just as good of a job as I could through like presentations and scripting and actual hands-on training with them and do a really good job, that the clients would be looked after. And I think that's a really big thing. Like, you don't want to abdicate the role, right? As in just passing it along and hoping it's going to be okay. If you train the partners in a way that you see, because they need to role play, and once you see that they're at that level, then when you're speaking with the client, you can wholeheartedly say, you know what, you can work with, Joel, John, Thomas, or whatever, Anya, Sally, or whoever the agent is, and say, you know what, you're actually going to be in better hands working with them. So I think the mindset change is important, and then the training side of it is really important. And then once that was really, I knew that things were fine. Then from a scorecard standpoint, it became like very important to see and nail it down, like what are the most important things. And really for me, it was like getting clear on the vision, holding the overall company accountable, still giving love to the team members there, but then growing my understanding of like what are the barriers to growth, right? And diving in and researching and then implementing the tools, enlisting and building the right team. And then the biggest thing was really developing leadership.
Yeah, for sure.
And if you can, when the biggest thing with the developing leadership side is it's got to be less and less you and more able leaders, and having to create space for them so that they can grow into that role. And I think that was a big shift for me, is where I was like, okay, it has to be less and less me, and then so you're building these strong leaders up, and the more strong leaders you have within your organization, the more you're able to grow.
Yeah, I see glimmers of everything you're saying right now with the team that I have now, where I've got one guy came from an amazing background, ran good life trainings, like regionally, nationally, like very, very sharp when it comes to that. Another guy that's great at sales. And I'm starting to realize that, like, by me doing all the work for everybody, it's actually preventing them from having the opportunity of stepping into larger roles, right? And it's you want to do the work because you think you're doing them a favor, but sometimes it's not, right?
Well, Justin, what you just said is like, you should like capture that into a quote. And I think if your listeners really understand, they should really understand what you said and hold on to that, because that was gold, what you just gave. I totally agree with that.
Yeah. Well, you identify opportunities and looking at opportunity zones, right? For what you're doing now, and that being something that's on your scorecard. Let's flip back to Florida. You go down to Florida and you start thinking about, okay, I can work here. The people from Canada are coming down here. And then you start realizing that there's investment opportunities. I know we'll discuss one in detail in a little bit, but what was that first inception point of, maybe Florida investing makes sense for a Canadian?
So we had to backtrack a little bit from that to answer the question. We were investing in real estate all along the way from 2008 and up. So we were buying single family properties. Then we were buying our office buildings, and then we got into the smaller multifamily stuff, these 6 units, 10 units, 14 units. And they were always great. But what I found was, as prices started to increase, and especially as rates started to increase, it was very difficult to find cash flowing properties. Like Barrie, for example, used to be able to find them. And then you'd have to go to Orillia and Midland, so tertiary markets. And then you're going way up to Sudbury and North Bay. And now it's like Kirkland Lake, to find like a single family that will actually make more money in income than expenses. And so that was one problem that I had. And the other problem was rent control. We would have tenants in that we go and buy a building, and rents were at like $600 and $650. And market rent was like $1,650 for a renovated unit. And so even for us going in and offering cash for keys, like we have a couple of examples where we've offered $30,000, and the tenants will, for this case, has, in these two cases, they told us to take a hike, like literally take a hike. Those were the words. And so that was another problem to be able to execute on a business plan. Your hands were tied, and the board now is, for cases, they're tied up for multiple months. So when I went down to Florida, I saw right away that you could actually buy deals that would cash flow like day one. And not only that, there's no rent control down there. So at the end of the year, when their lease is done, you can bump up rents. And then I started looking into, because it reminded me a lot of 2008, 2009, right? And then I started looking into, okay, the big drivers, what actually drives real estate prices? And it really starts with strong leadership that offers business incentives for businesses to move there. And Florida was doing a phenomenal job. And then I started looking at the employment growth in some of these areas. Like, Tampa, for example, like they're well above, their growth is well above, close to 9% growth, whereas the national average is like more like 3%.
Yeah.
In Tampa, there's 12 new jobs in this location. We bought this deal for every one new multifamily unit coming in. So that drives, so leadership brings incentives, that brings employment, and employment brings population. And population, they need a place to live. So when you started digging into all those metrics there, it was truly an emerging market, which made me really excited. And then I thought to myself, well, Canadians, Ontario, especially in Ontario, there's a lot of real estate investors that's just hard to find good deals. And so they love real estate. It's just hard. And I thought, what if we were to create a tax efficient structure where they can actually come in and partner with us and take down the big boys, the 100-unit plus deals, where we can compete with the BlackRocks and, the insurance companies. And, that's kind of the origin story on the capital side.
Yeah, it's interesting because I think, well, the deals we see and the deals we do, we are creating the value, right? It's either we know we're getting the vacancies by the time that we're actually closing, or it's vacant and I want it left that way, or we're finding deals with value add, right, for our investors. But it does require a varying degree of effort to go out and find those deals. I think you're taking an interesting strategy down in Florida where you're competing in the same pools as the big boys. But I think there's an advantage to being more tactical and quicker, being able to come from a market where you've had to do value add for quite a period of time, deal with challenges like rent controls and whatnot, and then operate in a market where they don't, right? You're probably a little bit more apt to get creative and find deals than people that are just used to it always being that way.
100%. Yes. And definitely, I still think in Ontario, it's more important than ever that they get like a really strong agent like yourself, and that you guys specialize in finding great deals. So I think like that, what you're offering right now in that market, like investors need that. And because otherwise, if they're just trying to find a good deal on their own right now in Ontario, it's extremely tough. So I still think you can do it. You just need to be really creative and partner with teams like yourself that can actually execute and find good deals and get good yield. But for people that not everybody, has a Justin in their market to serve them, right? So,
well, I'm not that special. I was going to say, like, think about Mike Heddle right in Hamilton. We were just talking about him, exactly. The version of real estate, right? And I think we're even realizing moving into 2024, we want to work with a very dialed in community of people. Like, our qualification and the way we actually accept people as clients, it has to be a two-way street just because of the effort. I think you must be building something similar down there with your equity partners and the people you're looking to invest in buildings with. It's got to be probably a certain criteria of person.
You got it. Because these projects, although are renovations, so we'll only go in and buy B-class assets, 100 units above, 1980s or newer. There's got to be a value add portion to it so that we can go in and force appreciation. Like this deal, for example, we have that we just wrapped up under contract. There's $324 per unit upside. There's 104 units there. So just by going in and forcing that appreciation, so bringing rents to market value and doing the renovation in the building, we're going to force the appreciation by $8 million. So that's going to be done within 2-year time frame. But the term of our investments, we say within 5 years, we're going to exit. But we don't, our thesis is we want to sell that building. And once we're done forcing appreciation as soon as possible and get the returns back to our investors and keep that money working for them and go after another deal after that. But so these could be 5-year terms. So for us, the relationship is extremely important, because if we're working with somebody and it's just not a good, like that's it's not like a regular, say,
5-year term. Yeah.
5-year relationship. So 1,000%, it's got to be the right fit. We do have 100,000 US minimum buy-in on our deals as well. So we're really focused on the VIP treatment, high level of communication, high touch. They all have my cell phone as a principal. And if they have any questions, they can directly speak with their underwriter or asset manager. Like, they have that kind of contact. And then they just need to be an accredited investor, which just is somebody, you don't need to do anything for this. You are or you aren't. So this is an and, or an or. So you either need to make 200,000 in income, or 300,000 household income, or $1 million investable assets, or 5 million net worth. And if you hit those criteria and you go through a suitability kind of conversation with because we work under Waverly, an exempt market dealer.
Yep.
Then you get the stamp and you move on. But once they're in, their investors have been very pleased with the overall communication and the results we've been delivering.
Yeah, well, I love the tactical approach. I think that was one of my most exciting parts of having you on the podcast today, is obviously business operation, but finding deals. Another topic I wanted to discuss with you is the current state of the real estate market. And I guess we can talk North America, but maybe we can break it down to your thoughts on US and Canada, the interest rates, where inflation's at. Like, well, what is Mark Faris thinking these days in terms of where we're at and the timeline?
Yeah. So I think that a lot of people aren't talking about, like, developers. A lot of developers have put their projects on hold, which is, we already have a housing crunch right now and a shortage. So in the US, they have 4 million households short. And one of the reasons for that was in 2008, a lot of developers got wiped out. And if they didn't get wiped out, they put their projects on hold. And so we got behind on new builds. So we got behind on housing. And then in 2021, you had supply chain issues. And so a lot of developers put their projects on hold because costs went up. I mean, we were building a 23,000 square foot. We'd scaled it back to 10,000 square foot building, and our costs went up along the way. And I personally felt that. And then now you have developers. So those developers put their projects on hold. And now you have developers that, they see with the interest rates, their costs to build are not going down. So they're just not building. And so I think we're going to be running into, within a couple of years, we're going to see another housing crunch. And so right now, the big difference is that supply and demand has not changed. There's more and more buyers that are looking to purchase, and more population growth are coming in. They need homes, and there's going to be less and less supply. And so, the other thing is that inflation is a real thing. Everything is getting more expensive. So if the cost to build isn't going down, do we think that we're going to have a massive crash? That's why. So we saw prices drop from the peak, 25, 30%, depends on your market. But now the pricing has been holding steady.
Yep.
And so you're just seeing what's happening is there's less sellers selling and less buyers buying, but prices are staying stagnant and staying the same. And so the big difference, the only variable, is that the government has stepped in and pushed interest rates. And so it's the government is meddling with the market, and they're controlling, and you can feel it.
100%.
Right. So I'm in the camp of, you can never predict 100%, but I'm in a camp of, it's not if, it's a when we're going to see another run in the market. And what I mean by that is like an increase, because there's a shortage of homes, and it goes back to basic supply and demand. And I think that's the story for markets right across North America, except for some of these markets are very pricey. And so, like, for example, when I say pricey, affordability is a big thing. So in Tampa, for example, or in Florida, we won't buy anything that is, if an average income in an area is, say, 100,000, we won't buy anything if rents are 33,000, 35,000 and below. So we want the percentage of their income to only about 35% or lower to go towards rent. In Barrie, for example, north of Toronto, on average, tenants are paying 50%. In Toronto, it's like 60% of their income
Wow,
going towards.
that's a smart metric.
And in New York is like 70%. So
Wild.
I
Yeah.
think that it's really important, I think, to be investing in these emerging markets where affordability is still, people can afford to pay more money because it's still affordable. And so I'm just, I've heard in the past, survive to 2025,
Everybody's saying
true,
that right now.
right?
Yeah.
But I think there's some truth in that. It's going to be dependent, obviously, in the rates and normalizing. And if, when they normalize, and, I know a lot of talk of it coming down because there's some pain going on out there.
Yeah.
I think we're going to see a run. What do
Yeah,
you
I
think?
don't see it not happening, right? So it's the exact same thing. I had one of the heads of First National in here the other day for a team meeting,
Yeah.
and my team was just drilling her with questions. And one of the questions was, "What are the delinquencies that you're seeing?" And we all expected it to be 10%, maybe 15. She's like 0.04%. And she said her numbers in June, like they were up in terms of deals that they fund. And she said the buyers haven't gone anywhere; they just can't buy because of the interest rates, right? And we're bringing in 500,000 people a year.
Yeah.
They have to go somewhere. And she said a lot of these people are coming with money and they want in. They don't necessarily care about getting a great price. They want in on the market. So I think exact same thing you just said is exactly what I think. I think government crushed the housing supply, the sentiment. It's still crushed. And builders have taken 30%, 40% of supply offline. It's going to be a bloodbath when people can re-enter the marketplace and there's less houses for sale. I think from the conversations I'm having with developers, they're more prepared this time than they were during the last supply crunch. But I don't see the supply issue being solved. And that's one of the biggest things is I don't even know how you solve it. How do you all of a sudden get as many units as we need when the government thinks announcing, 100 houses in London is going to move the needle when we need a lot more than that, right?
Well said. Yeah, that's smart. And I'll add kind of one last thought there to this is that when I go back from 2007 till today, the best times to buy real estate were the times that was not sexy to buy real estate. The newspaper saying it's going to drop. It's like all your friends and family, they're like, "Oh, you're in real estate is horrible." That's exactly how it is today, and so the times, it's so interesting because the times where you're seeing run up in prices, everybody's like, "Yeah, that's a great thing, great investment," but that's the time
to sell.
Really be concerned. But we've already seen a discount. We've seen prices come down. And so this is the time to buy. And so this is where I'm just going back, time after time from when I started till now. And if they go back and actually think about in the past, those times were actually really good. So that's where they need like voices like yourself and myself saying like, guys, remember, like, this is good because on the backside of this, they're going to be really happy that they jumped into the market. And like, for example, the deal that we have down in Tampa right now, like we got this at 20% under the peak value when the market's peaked.
Wow.
And so it for something to come down 20%, it takes a lot. So we're acquiring these properties at discounts now. And as we come on the backside of this, we think we're going to be positioned extremely well, and all of our investors as well.
A big asterisk I want to put to this is the people that don't know us will look and say, well, look at these two sales guys telling you to buy real estate. Like,
right.
The advice I give is the advice I'm actually executing on. Like, I'm good. I don't need to sell somebody something that they don't want. I think I really want to highlight that. Like, Mark's in a good position and he's investing himself. And I appreciate you sharing the knowledge because I do think people need to hear it just very candidly based off what you actually think, not just a sales pitch, right?
Well, yeah, and this is what we're doing with our personal funds. I mean, I think that's a big thing. Are you investing right now? Like, where are you investing? I think that says a lot as well. Like, we're not just saying it, like we're doing it ourselves as well, and we're telling all of our friends and family to do it. We're telling, so to me, yeah. I mean, if that's the approach and that's the mindset that we're just trying to sell something, I mean.
I can't help you. If you want to put that narrative on people, it is what it is. But you probably want to see your family and friends at the events that you host, right? So you're probably going to take care of them.
Well, 1,000%. Yeah. I mean, the reputation is more important because, I mean, it's a short-term approach. If you're trying to, if you're trying to like, quote unquote, pitch, as that, pitch something that is not a very good thing, I mean, over time, your reputation gets squashed, and that's something from 2007 till now. The reputation has always been above. Like we don't always get it right. So there's an example there where their documents had come in. We were selling a lot, and for whatever reason, we didn't clearly define what the property was. And the reality is we made an error on that, and so we went back and it ended up going kind of through a process, and then we came down to it where there was about $40,000. I talked to the client that there was a little bit of he still did really well, but there's $40,000, and I needed to make a choice. I'm either going to cut this check or I'm not. And so I ended up writing that check for 40 grand out of our pocket, and that was like, that was one of those things that I just wanted to look back at my career and be proud of what it was. But that, because you're protecting the reputation, the reputation
Absolutely.
is above, a paycheck. But there are a lot of people out there, agents that will, kind of push something more short term, but they're not in the business long term.
No, and every one of us has a story like that too, where you're at a crossroads and you have to make a decision. And
Yeah.
I remember Shannon early on in our career, somebody had pitched us an apartment building, and we had a guy that was buying apartment buildings, and we looked at the deal. He liked the deal. We went through it, but something wasn't just right about it. So Shannon broke down the numbers, and we were like, wait, let's just tell Bob to take a second here and back off, and let's do what's right for Bob. And we killed the deal the next day. And it was early on in our careers. It would have been a flagship sale, but our founding principles: do nothing out of selfish ambition or vain conceit, put others before yourself. Yeah. And I think I admire hearing that story from you, because the other thing is, like, guys that I respect that have told me to reach out to you now that we're connected, what they say about you when you're not in the room is probably one of the reasons why you are where you are, right? And I really encourage people to reach out and connect with Mark directly, whether it's about the Florida deal or just real estate. Because, I mean, in the week and a half that we've talked and I've known you, you've shared some insights with me that you didn't have to, right? Because we're not team members, we're not partnered on anything yet. But I think it says a lot for the community that you're trying to build around you. So tons of respect for you for that.
Yeah, thanks, Justin. Same right back to you.
Yeah. Well, I want to make good use of your time. I know you're at a big summit right now with a whole bunch of people I know. So you go have fun with them. If you're looking to get connected with Mark, all of his information is below. If you're a client and you want to get connected with him directly, feel free to reach out to me. I can make a personal intro to Mark, and we'll get you on an episode, a new show that we're shooting with agents when you're back in Canada or next time I'm in Naples, my man. But it's good to see you, and thanks for coming on the show.
You too, Justin. Yeah, thanks. Thanks again, guys. Talk to you soon.